Hey guys, welcome back to Smart Trader. This is daicepaul and thank you so much for all your love and all your support. In this particular video, we are going to talk about the intrinsic value. So this intrinsic value will help you to pick the right stocks or right investment. Okay. So now when I'm talking about this, you may think, what is Dice talking about intrinsic value? Why should I even learn this, right? The question is, why should I even learn this intrinsic value? Why should I learn the definition of intrinsic value, or what will help, how it will help me by learning all this fundamental? So this is a fundamental topic. So if I learn this, what is the benefit? So what I will do before talking or looking into the theory or definition on Google, let's go take an example in practical and see how this will work. All right, so I have an example over here. If you see, for most of you guys who don't know, or you would have known that I have a car which is called KWID and Climber. So therefore, I will take an example of my KWID Climber. Yes, I'm a proud owner of KWID Climber, so I own it. And so for example, in this example, what I have done, let's say I'm planning to sell my KWID car for a price of 4 lakh rupees. Okay, but you know that we can sell, this is what I will, the price I am selling to the people out there in OLX or Quicker or wherever. But you know, there are dealers, like for example, Cars 24 or OLX Cash My Car. So different dealers are there. Now these dealers, what they will do, they will evaluate my car. They will check how is the condition of the tire, how is the condition of the engine, and how is the external body performance, year of manufacturing, how many kilometers run. Based on all the so many parameters, there are some 20-30 checks, right? 100 checks also, I don't know. So based on these checks, they say your value of your car as of today is 3 lakh rupees. So this is the dealer's valuation I have just put. Now what will happen? Obviously, because the valuation is 3 lakh and I am quoting 4 lakh rupees. I am quoting 4 lakh because according to me, I have maintained my car really well. It's my favorite car. It is close to me. I have given only to Renault showroom. I put speakers, woofers and all those. So according to me, it is worth more, 4 lakhs. But according to dealer, based on the situation of market condition, what exactly it goes is 3 lakhs. So if you see, the less number of buyers will be there in this condition. Okay. So obviously, if you are buying this car, you will not buy. When dealer's value is only 3 lakh, you don't want to buy it for 4 lakh, right? But let's say I am selling the same car at 2.5 lakh rupees and the dealer's valuation goes to 3 lakh rupees itself. So obviously it's a great deal. Now anybody will jump and buy this car for 2.5 lakhs and they'll immediately resell it for 3 lakhs. They know the market price, the exact price of this value of this car is 3 lakhs. It's worth 3 lakhs rupees. They can sell it for 3.5 lakh also, no problem. So they will jump and take my car, which is 2.5 lakhs, and they may sell it to 3 lakhs or 3.5 based on their talents. So in these two conditions, you felt this deal looks better, right? Now same thing if I put an example for stock or share. So instead of my Renault KWID, I will consider stock or share, any stock or share, a company share, Reliance, or any stock we are talking about. So let's take the same example here, very simple example. So let's say the market price. Okay, so the market price of so and so, let's say Reliance only is around 2000, rough example, 2000 as of today, let's say. Then the intrinsic value, now we are talking about intrinsic value, how the dealer value was calculated. I would say the real value of Reliance is 1800 rupees. I'm just giving a rough example. Okay, but market price like 4 lakh rupees, market price is trading at 2000 rupees, but the real value is 1800. So not a good idea to invest or take this particular. I know there are people who will take it without knowing all this information, but there are investors who calculate this intrinsic value, get to know that no, it is above my value. It's above the valuation of the company and it's not good to take, it's not a good deal. Same way, if you consider the market price of Reliance was 1600 and the intrinsic value was 1800. So what I'm saying is, see, you can see this is Reliance. So Reliance is trading around 2082, right? So now, like I told you, this is the market price. Because overreaction of the people feel that the stock is going to go up, come down. So based on people's psychology, the stock is pushed up or stock is pushed down. People are reacting to it. But there is something which we can calculate, intrinsic value, the real worth of Reliance, which we can calculate based on a lot of parameters. So that is what I'm talking about. So therefore, what I said is Reliance, for example, market price was here. So let me just on my highlighter. Okay, so the market price was 1600 and the intrinsic value, the real value of Reliance was 1800. Then obviously I have the 600 points to be hit, right? So therefore it's a great deal for me to invest in this particular stock. So fundamentally, you see, these investors, the big investors, they identify the intrinsic value of a company or stock or share, and then if your current market price is below this, see in this case it is below, right? So if it is below, it's an opportunity till here, right? So that's the reason you see a lot of brokers giving a buy. According to them, the stock can reach up to 1800, target 1500, Reliance to 1300. I also gave an example of Reliance would go and so in my previous video. You can go and check, and I think it worked out. Maybe I just checked few parameters, but there are so many parameters which you can check and decide what is your intrinsic value. So now let's not forget the Google definitions, because theory is also important. Now if I tell you the theory, it makes sense for you. So what is an intrinsic value? Okay, very simple. So intrinsic value is a measure of what an asset is worth. So like I told, how my KWID is worth of 3 lakh only, or how much is Reliance worth, 1800 only. So it will measure what is the worth of an asset. Okay, so this measure is arrived at by means of an objective calculation or complex financial models. So how do they calculate this? With the help of financial models, their balance sheet, their performance, their earnings, many other things. And also they use technicals to understand how whether it is an overbought, oversold, and most of them it will be like fundamentally they try to find out. So rather than using the currently trading market price of the asset. So now I told you in the market, so this is the current trading market price of Reliance, right? So Reliance is trading here. Maybe it's a reaction of people. People are, bought it so much that the stock has gone up, but the actual value is 1800 maybe. Okay, I'm just giving an example. So it will not consider this market value. It will find the actual value based on the profit done by Reliance, or the profit which is going to make by Reliance, the new businesses which are going to come to Reliance, how their management is working, their past performance, their competition within their own competitors, how they are doing, will that be a threat in the future. Also they will consider the market risk, the future risk in an Indian economy, the market, the new rules may come in the market. Based on all these parameters, they will say this is the value according to them. Now this value cannot be same for everybody. See, if I say Reliance value is 2500 example, my friend says he can say it is 2300, because his calculation, he would have used step ABC, I would have used the step XYZ. According to my calculation, this is my deadline. Now let's say, this is my 1 week chart of Reliance, or if I put 1 day chart of Reliance, if you see, this is a 200 exponential moving average. So it has gone far away from the moving average. Now somewhere I would say it can come closer. I'm not saying it will come and touch. It can come closer to it. Small correction, and later it can go up based on the company's performance and all those. So based on my criteria, I use, let's say, a moving average, or let's say I'm an RSI saying it's an overbought zone, but it's breaking again and again because so many investors are ready to buy. Fundamentally it is good. So technically it is breaking. But my friend may look into some other parameter. He may look into the balance sheet. He may look into the many other factors. So different people have different understanding and perception on this. The person who predicts and speculates the right way, his assumption goes right, he makes money in the market. So to do that, you need to have a lot of information. So that was a very simple definition. Now, if you don't understand, read this again or see the example what I taught you in the before, so it will make sense for you. So now last one is how to calculate this. Now, I would say there are two ways how to calculate the intrinsic value. One is the hard way and another is the smart way. Hard way is nothing but you will manually go and check all the balance sheet and earnings, quarter on quarter analysis, quantitative, qualitative analysis, full fundamental analysis you will do along with technical analysis, predictions, everything you will do by yourself. It's a hard way which is very difficult for you. You should have a team with you. You need external sources, many informations to do. Smart way is nothing but, see, there are a lot of companies who are already doing this. There are experts with a team doing all this information, collating everything in one PDF, like 5-6 pages or 10 pages. You will get the report, research reports you would have heard. So they have done all the fundamental or technical reports they have already done and they're presenting in front of you. So maybe a few brokers are giving it for free, or maybe they are charging premium by different companies. So maybe depending on that, you will get more information. So now smart way looks very easy for you guys, right? But you should always understand that even though you get the report in your hand, when you read the report, if you don't understand what is the balance sheet, how is the profit calculated, operating profit, or whatever ratios, whatever you see, if you don't understand this, what is the point of having this report in your hand, right? So for example, if you have a mobile, if I give you the best mobile in your hand, world's best mobile in your hand, and if you don't know how to operate, what's the point of having the best mobile in your hand? Same way, having the best information in your hand, if you don't know to read it, if you don't understand the logic, what is the balance sheet, how is this fundamental analysis done, there is no point. So that's the reason I am trying to teach all these concepts step by step from the beginner's point of view in a very simple way, so that you guys understand the meaning of all these fundamental analysis things, so that if you are good at fundamental, if you know all these meanings, whenever you read these reports, wherever you are getting in a smart way, I would say smart way, if you read all these reports, you will know how to utilize, because nobody will tell you intrinsic value is 1800. They will give you all the information, technically, fundamentally, every information they will give you. You as an investor have to decide what is your intrinsic value, and then you have to take your decision, because they will not come and do a investing for you. You have to do the investment. So you have to do all the calculation. For that, you should understand what are these terms and what is the meaning, logic behind it. So we will be learning all this logic. So I am planning to teach you guys all this logic. Whatever I learn, I explore, I will share it with our Smart Trader family, so that today you may learn, you may put little efforts in learning all these definitions, but tomorrow when we read reports, we are in a better situations. So the smarter way of trading is, technically you got a signal buy, but fundamentally ensure the stock is good. Don't put on a stock which is drowning or company which is drowning. Technically you got a buy, but the stock may fall down. So keeping this in mind, we will start off learning fundamental wordings and all these terms step by step and logics behind it. I hope this video made you understand what is an intrinsic value. If you like such videos, then hit that like and share this video. See you soon in my next video. Till then, take care. Bye bye.